Let's go to our topic for today. Indonesia's gross domestic product GDP grew higher than expected in the second quarter of this year, despite rising uncertainties in the global economy. However, some have questioned the GDP figure, saying that the increase was unrealistic.
According to the latest report issued by Indonesia's statistic agency BPS recently, the country's economic growth rose to 5.12% in the second quarter from 4.8% in the previous quarter and exceeded the market consensus of 4.5% for the quarter. According to Muhammad Edi Mahmud, Deputy Chief Statistician for National Accounts and Statistical Analysis at BPS, the second quarter's growth was primarily driven by robust household consumption. This was supported by fiscal stimulus measures, expanded social assistance programs, the disbursement of the 13th month salary for civil servants, military and police personnel, as well as the extended national holidays that boosted population mobility. From the expenditure side, exports of goods and services surged by 10.67%, driven by strong performance in several non-oil and gas commodities, including animal, vegetable fats and oils, iron and steel, electrical machinery and equipment, and motor vehicles and parts. Additionally, the rebound in international tourist arrivals contributed to the rise in service exports. On the production side, the manufacturing sector grew by 5.68%, supported by strong performance in the food and beverage, basic metals and chemical, pharmaceutical, and traditional medicine industries. However, the Central Statistics Agency or BPS report regarding Indonesia's economic growth reaching 5.12% in the second quarter of 2025 sparked mixed reactions. Several economists questioned the growth, believing it did not reflect reality. Nailul Huda, director of the Digital Economy Center of Economic and Law Studies, or CELIO, stated that the anomaly was evident in the economic growth in the second quarter of 2025 as compared to the first quarter of the same year, which included the Eid al-Fitr holidays. Historically, the highest economic growth has always occurred around Eid al-Fitr due to high public spending to celebrate the holiday, said Nailul, as reported by Tempo. The second anomaly highlighted by CELIOs was the manufacturing industry growth data. According to BPS data, the manufacturing industry grew 5.68% year-on-year at the time when the Indonesian Manufacturing Purchasing Managers Index, or PMI, fell below 50 points during April to June 2025. CELIO's researcher also questioned the 4.96% growth in household consumption. He argued that this growth was unrealistic, as it was during the period that layoffs increased. Coordinating Minister for Economic Affairs Erlangga Hartarto denied any data manipulations and the calculation of Indonesia's economic growth in the second quarter of 2025. There is no such data manipulation, he said. Erlangga emphasized that the second quarter economic growth, which reached 5.12% year-on-year, was supported by a number of real indicators, particularly household consumption, investment, and public mobility. Meanwhile, Finance Minister Sri Mulyani Indrawati predicts Indonesia's economic growth in 2025 will continue in the second semester and reach 4.725% for the whole 2025, but it will below the initial target of 5.2% set by the government despite the positive growth.
Now, the Indonesian GDP growth was recorded at 5.12% in the second quarter of this year, rising from 4.8% in the previous quarter. But a number of economists doubted the GDP figure as it occurred when there was a sign of a decline in people's purchasing power. So we have our guest, Bapak Josua Pardede on video call, who is the Chief Economist of Bank Permata, and he will review the GDP growth in this first quarter and the prospect for the remainers of this year of 2025. Hello, Pak Josua, how are you?
Hi, Luisa, I'm good.
Thank you for sparing your morning here with us on Economic Outlook. Pak Josua, the economic growth have accelerated to 5.12% in the second quarter from 4.5% in the previous quarter of the year. But there has been some criticism where many economists are questioning this growth figure. So do you think this data actually reflects the real condition of Indonesia's gross domestic product at the moment?
On the one hand, I think the data should be questioned because some leading indicators, for example, that related to the car sales, motorcycle sales, that dropped in the second quarter, and also FDI shrank, manufacturing PMI fell into contraction, and the waves of layoff also were reported. These all suggesting weaker economic activities. But I think if the data tells the truth, I think should be one-offs, meaning that, as already mentioned earlier during the VT, that the spending, people spending actually is highly dominated by during the holidays. Yeah, we noted that in the second quarter we have so many public holidays. So knowing that recently in the recent quarters, actually Indonesian people tend to spend on the services than to goods. So that's why I think when we look at the data carefully, some spending actually still grow significantly, particularly on the leisure spending, while on the other hand, spending on the goods as related to the retail sales and then purchasing on the automotive sales, I think still negative. So I think, yes, again, we might question the data, but if the data tells the truth, we think that this would be one-offs in the second quarter, and also we question about the manufacturing meaning of the investment. Yeah, knowing that the global condition still still unstable. So I think the intention for the foreign investors to invest to Indonesia is relatively very limited. So that's why we question also why the investment on the machinery and equipments growing roughly around 25%. But again, looking forward, we think that in the third quarter GDP data should be normalizing on the back of the one-off factor in the second quarter of 2025.
I understand why the data now questionable from a certain point of view from the economists. Now, many believe that the household consumption in the second quarter is not in line with the reality, and as purchasing power is estimated to decline during this period. What is your opinion about this contradiction so far?
Yeah, on the weak purchasing power versus the solid consumption, the contradiction, I think both can be true depending on what you measure. In the second quarter, household consumption was steady, nearly 5%. And I think this is driven by transport, communication, and restaurant, hotels, because travel and tourism boom around Eid al-Fitr and Eid al-Adha. And meanwhile, high-frequency data, as I mentioned earlier, such as retail sales indicators, car sales, and consumer confidence, were softer, capturing the good, heavy discretionary baskets that lack the service surge. So I think the consumer felt weaker, as the services spending carried the aggregate. So we think that the net purchasing power didn't collapse, but it rotated from the goods to the services, while the remaining uneven across income groups. So we still see that for the middle to high income people, they don't see any challenge from the purchasing power. But for the low to income people, I think they still face the challenges indicated by layoffs in labor intensive sectors, and then the real income for the some people also tend to be decreasing. So we think that there is a significant divergent moves, yeah, from the between low to middle income people and middle to high income people.
Joshua, compared to the first quarter of this year, where the economic growth is 4.8%, and now it has actually increased to 5.2% increase so far. So what is the outlook for this second half? Is the 5.2% target for this year actually achievable? I mean, considering that there's not many more public holidays for the rest of the year.
Yes, totally agree with you that in the first half, GDP was around 5.99%, even lower than, slightly lower than 5% actually. And if we want to achieve 5.2% in the full year, so we have to achieve 5.4% in the second half of the year. So I think it is unrealistic because we find that the tariff from the US will be taking place in the third quarter of GDP of the year. So that's why this will impact negatively to Indonesia's next export in the third quarter of the year. And then also, as you mentioned earlier, that the holiday related spending related to these holidays in the third quarter GDP also will be high likely normalizing. And then related to the investment, we don't know yet. Yeah, even the public capex that we've seen in the second quarter can boost the confidence in the private investment in the third quarter and the rest of the year. But if doesn't exist in the second half of the year, we think still that the GDP for the full year, particularly in the second half of the year, still slightly below 5%. So all in all, for the full year, I think to achieve 5.2%, I think still is still hard to achieve the target.
So if you are seeing here that domestically that the economy is somewhat still challenging, the condition is, the economy is still slow domestically, and the global tension internationally is still pretty high at the moment, especially with the tax issue from the US. In your opinion then, what will be the main drivers of growth in the next 6 months for Indonesia's economy then?
So when we look at the disbursement of government spending, particularly just in June only, yeah, from what we seen that the government can accelerate the spending significantly just in June. So it can be seen in the third-party fund from the banking sectors also rose significantly in the June. So I think the key growth factors for the second half is the accelerated budget disbursement from the government from the government side, and also the capex execution carried through second quarter investment into buildings and infrastructure and machinery, resilient services, for example, tourism, logistics, ICT, and also targeted stimulus. Noted that the government also implemented the fiscal stimulus, yeah, in June and July, but somehow I think still will be reflected in the second quarter of GDP. So we don't think that again the impact of the U.S. tariff will high likely affect negatively to the Indonesia's export demand. So that's why of course we still need some the boost or stimulus from the government expenditure. So, and then of course, the government also should maintain the manageable inflation, because what we heard also lately that rice prices still continue to increase. So it will impact negatively to the purchasing power in the second quarter and the rest of the year. So we think that the domestic demand, particularly the cost of consumption and the government investment, I think should be the main contributors to the GDP in the second half of 2025.
Right, so we're still heavily relying on the government to increase the people's confidence to make our economy better again in Indonesia. Now, speaking of the tariff imposed by the US, which is 19%, how is this going to affect Indonesians' exports during the second semester?
So the US 19% reciprocal tariff will be headwind to the exports in the second half of 2025 after some second quarter front loading experience and evidence already, I think, showing that in the third quarter, the export has spiked in the first and second quarter of the year. So we think that the net exports are likely to contribute less going forward, as the global demand also softens and the tariff bite from the US, knowing that also that in the first semester, the China growth still growing around 5.3%, and then looking at the risk of the domestic property crisis in China. So we are expecting that the China economy will be slowing down. So there will be some effect from the demand side, the global demand, and then the impact from the normalization in the commodity prices. And then, of course, the direct impact from US tariff that will hit Indonesia GDP around, because the direct impact will be around 2 until 3% of GDP. So we are seeing that the impact will be hitting some manufacturing such as textile, garments, furnitures, electronics products. Some manufacturing also will be affected negatively by the direct impact from the US tariffs.
Pak Joshua, last question. It seems that from many perspectives from the economists that we are seeing rather a gloomy outlook to Indonesia's economy towards for the rest of the year. What do you think will be the main challenges to Indonesia's economic growth for the next 6 months then?
Yeah, I think the key challenges over the next 6 months, I think externally, of course, the trade war 2.0 and fading global demand, that could threaten in export volumes and prices, while the CPO commodity prices, like CPO and also metals, could swing terms of trade. Also, I think the macro financially real rates remain relatively high, and even bank loan growth has eased in the second quarter of 2025. So I think the credit transmission may lag even if the BI has cut the interest rate so far 75 basis points. So I think from the domestic side, I think the risks are the budget execution, from loading capex and also social outlays to the high MPC households, and also fewer holidays that naturally soften the household consumption. That the possibility that imports also demand prices faster than exports, because we are seeing also the expectation of the Chinese product coming because they cannot enter US market. So I think Chinese product can enter Asian market, including Indonesia. So I think the risk of the increasing imports will be also increased. I think the policy priorities should be taken into account by the government. I think, of course, to accelerate and the capital spending, especially for the public works and materials, targeted the social assistance to the lower income people, with a high MPC, and also safeguard or manage the FX liquidity to anchor the sentiment from the foreign investors. And last but the least, of course, the fast track the micro reforms that cut the logisticals and also energy costs for the investors. And also, in addition to that, I think the government also should focus again to the labor-intensive sectors that can absorb so many labors that can create jobs. So that's I think this is very critical to maintain the purchasing power of the Indonesian people to be maintained around 5%.
Lots of homework right there for our government to lift up our economy. Bapak Josua Pardede, Chief Economist of Bank Permata, thank you so much for sharing your knowledge and insights with us on Economic Outlook today. Thank you.
Thank you. Thank you for having me.